Hey guys, B Twice here. Today is Tuesday, July 20th. I hope everybody made some good gains today in the market on this massive rally back to the upside. Today we're going to take a look at a handful of stocks, but we're going to start off by looking at SPY. I want to start off by looking at SPY because I want to talk about a video I put out on the weekend, a video put out yesterday, and then ultimately some moves I made today and why I made those. So on the weekend, I talked about how I saw this being a shallow bottom somewhere in the 428 range, and I didn't think it was going to break that, and that I was going to be buying calls because I still think all-time highs are in the near future. Then I was tweeting yesterday morning at open that I was going to sit on my hands for a little while because I wanted to see the open price action because it flushed way further than what I thought. But then ultimately, when the price action was starting to show yesterday, we came down and we hit this 14.6% retracement and rallied off of it sometime around noon. So around 11:30 noon, as we were in this range, I could see a clear ABC swing to the downside. Now these are dips you want to buy. You always want to buy in either 3, 7, or 11 swing. So a 3 swing is an ABC move. A 7 swing is when you have a WXY move, and then 11 swing is when you have a Z move. The reason you want to do that is because you're always going to get a bounce back to the upside. So as you can see, if you're looking at the RSI yesterday as well, right around this range, right? So right around this 1130, what are we seeing? The RSI is stupid oversold. It has to bounce. It has to bounce. There's no way it's not going to. It's not going to keep going lower, meaning you can scalp options. Now, if you're looking to scalp options, you want to play weeklies because the little bit of movement that you're going to get to the upside is going to pay, and then you're going to want to take profits quickly. Now, with that being said, because I was seeing a clear zigzag to the downside and us hit this 14.6% retracement, I bought weeklies for next Friday, and I had every intention of holding for at the very least, I wanted to see a clear 3 swings to the upside and then get out. So I tweeted this morning that at 428 or better, I was going to be selling and taking my profits because I was not going to be greedy. Now, why am I not going to be greedy? Let's talk about that. So I'm extremely hedged right now. I have a lot of puts and I had short-term calls, and also I was buying long-term calls yesterday. I was buying long-term calls yesterday because this technically could be bottom, and I didn't want to close those out. I wanted to keep holding those. So with that being said, what could we read this as? So today we popped up, right? We pulled back and then ultimately rallied super high, higher than I thought we were going to see today, but ultimately we rallied pretty high. So there's a couple different ways when you're looking at wave theory that you could read this chart. You could read this as an impulse, as a 1, a 2, a 3, pull back for a 4 right here, and ultimately we're going up for this 5. I have it in red because it can be read two different ways. When we go up and hit this 5, we're gonna pull back no matter what. Whether you're a bear or you're a bull, you're pulling back when you hit this. So that's one way you could read it. If you're the bull, then you're saying, hey, we're in an impulse. We have a 1, 2, 3, 4, 5. We're gonna pull back for a 2. We're gonna catch support somewhere down here in the maybe 428 range again, and then from that spot, we're gonna rally back up to all-time highs. Now, the other way to read this chart is that we're actually only in a W right here, and that we're heading down for Y, and Y could be as low as 400. It could be the 23.6 or the 38.2. Now, mind you, we've already touched the 14.6, meaning we've checked the box for a wave 4. A wave 4 has to retrace to at the very least a 14.6. So we've done that, but it's not the most common. The most common is either 23.6 or the 38.2. And that's why it may be more favorable in Elliott wave theory terms to expect that there's going to be more downside. Now, the bears are saying, hey, there's going to be more downside. This was a W. We had an ABC. This is a W. Now we're only going up for an X. This was an A. This was a B. This is a C. It's going to be an X. Ultimately, we're going to head down. We're going to have a zigzag move to the downside, and we're going to end up somewhere in this, maybe 415 or maybe all the way down 400. Who knows? So that's what the bears are saying. So now, how could we trade this? Cash is a position. I tweeted that earlier. When I got above 428 and 429, I took a lot of profits. I closed all of my weeklies out except for my puts to the downside that are a couple weeks out. The reason I did that is because I do favor downside. Whether I'm a bear or a bull, I'm still favoring downside from here, so I can easily scalp my puts on this downside and then just sit in cash to try to look at the price action. So now how am I going to trade this? Well, the one thing I'm looking at is this RSI here. That's pretty bullish. We had bearish divergence and ultimately we broke above that trend line. So that's pretty bullish. So I'm going to be watching RSI as we come down. I want to see, how bad are we going to sell off if we do sell off, and then ultimately I want to see how we're going to react as we come down to the 61.8% retracement. So once we top and we start pulling back, I'm going to be looking for either a couple different things. I'm either going to be looking for an impulse taking us down, or I'm going to be looking for three swings. And so if I'm trying to buy the dip, if we end up having a five-wave impulse taking us down to this trend line, I'm not buying that dip, because ultimately what's going to happen is we're going to get a little bit of a pop-up and then we're going to come significantly lower. But if I can see a clear three swings, so like an A, B, and a C, and that's going to take me right around that 61.8, well, that's a high probability trade. And at that point in time, I likely will grab a few weeklies, and then just make sure I use my stop loss as this level down here, if I'm not completely blown out by that point. But long story short is, obviously at these levels, we really don't know where this market is going. It can go one of two ways. It's either going to all-time highs off this bull count this way, or the bears are going to be right and it's going to go lower. And so that's why you want to make sure that you're risking appropriately, holding cash or hedging appropriately, and take gains often. If you have big rippers, you want to get out quick, because there's going to be a lot of chopping here. Ultimately, I guess where I'm looking right now, even though we've only touched this 14.6, based on this move we've seen today and big tech earnings next week, I think I'm favoring this bull side. If I wasn't favoring the bull side, I wouldn't be holding calls out for September. Um, but I am kind of favoring the bull side at this point. So I will be looking to get back in, but we'll move on for now. But either way, it'll be an interesting couple days for sure. All right, so let's take a look at QQQ. All right, so same thing with the RSI. We broke through the downtrend line on it. Um, so let's take a look at what we're seeing. It's basically the exact same thing that we're seeing with SPY. So what do I expect? Well, I expect a little bit more upside, just like I do with SPY. And then from that upside, I think we're going to see a flush. And then it's just going to be a question of, is this a bear trap, or is this going to be a buy the dip? I'd like to see the price action leading up to that, and then obviously how stocks are reacting after earnings to make this decision. But like I said in the previous video, I am favoring the bull side, and so I will be looking to buy calls. Now, with that being said, because I can easily be wrong, on my dip buys, I'm mainly buying long term. We're talking a couple months till expiration options. And why am I doing that? Because even if I'm wrong, my worst case scenario, I'm seeing QQQ somewhere down by 345. Worst case scenario. So if I'm buying a couple months out and I think we're going to catch support here and ultimately rally up to all time highs, then my options are going to be fine and I'm still going to make money, because my puts are going to make money on this drop down. I'm going to take profits on those, and then I'm going to ride the rally back up. I'll probably even buy the dip more often down here. So with that being said, this could go one of two ways. Obviously, we have the bull count that's taking us to all-time highs relatively soon. The bear count is that we're going to flush right through this. So a lot of times, especially right now, you want to wait till 11 a.m., 12 if you're making trades. You don't want to do it right at open, because there's going to be a lot of choppy moves. Obviously, yesterday we flushed pretty bad. And then today we opened up where futures were ripping. And then we opened up, and I want to say we were close to flat, maybe a little bit positive, and then ultimately we ripped throughout the entire day. So you want to let the market come to you. You don't want to jump in too early. All right, let's look at IWM. So IWM, I tweeted yesterday, or maybe it was this morning, I can't remember, but I think it was yesterday, that IWM could take the lead for the market on this next leg up. It was super, super, super oversold. Um, Obviously, I'm thinking that my long-term count on it is wrong and that we are in a deeper correction. So just disregard this 1, 2, 3. I'm just going to talk about what I've drawn on here now. Ultimately, I do think that there's a good chance that we've already bottomed on IWM. So IWM a lot of times can be used as an indicator, right? So we started seeing divergence on IWM last week before the drop in SPY and QQQ and everything like that. So because of it a lot of times being able to be used as a leading indicator, it's going to go, if I think all-time highs are coming, it's going to be making the move higher before anything else. And we saw a really, really big move from it today. It went up 3%. Ultimately, what I'm seeing is I'm seeing a five-way move. I think I'm seeing a 1, 2, 3. I think we're going to pull back for a 4. So I think we're going to probably go a little higher, pull back for a 4. Ultimately, then we're going to rip from there for a 5. That's going to take us up to this like 220 range. From there, we should get a flush, and then that will be a great dip by spot, because I'm seeing this as a 1. I think we're going to pull back for a 2, and then ultimately we're going to go 3, 4, 5 to take us up to this upper trend line. So we'll see if we can get a good dip buy, but we want to make sure that we're buying in 3, 7, or 11 swings. We do not want to chase. You don't want to buy calls today when it's up 3%, because you're going to get nuked tomorrow when it drops. You want to buy it when you're coming down for wave 2. I'm not even going to buy this wave 4 pullback. That's not enough. I mean, I want to see a pretty relatively big drop on this guy, and then from there I'll take my trade. Um, Buying in down here and using this trend line as your stop loss, is very low risk. Taking a trade up here at 219 and then having your stop loss all the way down here below, your position's nuked by the time you hit there. So be smart about when you're taking your entries. All right, so PLTR. Enough of my rambling about the indices for now. So PLTR, I tweeted earlier that PLTR bottom could be in. So let's take a look at this in a little bit more detail. And I apologize for the craziness, but obviously I've been following the stock for a while now. So I first started following the stock on the initial ride up and basically said that we were in a 5-wave impulse for a wave one that was taking us up to this 27 range. Ultimately, that hit. So then I was like, okay, we're going to see more downside. Where are we going? So far we've had an A, B, a C for a W. We pulled back up for an X. In previous videos, I talked about how you don't want to trade against the trend, so taking this trade isn't very smart. You want to let it come to you. So we came down for a W, went up for an X, and then ultimately we're pulling down for a Y. So all of these dips that we're seeing, I think in terms of shares are good buys. So like in this range, I was buying shares. I'm talking about call options. You don't want to really take this trade unless you're looking at like a weekly that you're literally just trying to catch this quick pop and get out. And the reason behind that is because you got to look at where you're at in the count, right? So this is a wave one and we're coming down. So the most common spot for a wave two to bottom is your 61.8% retracement. So that's $20 a share. Well, up here, we're still at 22. Yeah, we've had a zigzag down for an ABC move to 22, but we're not all the way down to 61.8. So this is a good dip buy spot for shares because it doesn't even matter if you catch the exact bottom. Yeah, the closer to bottom you get, the better. But it's not that big of a deal because you can always double down when you get down here and you're holding for the long term anyways. But when you're buying call options, if you pick your bottom wrong, you're going to be screwed. So let's talk about where we think this could be going. So now we've come down for a W, we've popped up for an X, and we pulled down for a Y. We've completely bounced right off this 61.8. So this could be our wave two bottom. Where I have Y right here, this could be our wave two bottom. So what are we seeing now? What we're seeing is a pullback for a two, and we could be seeing a wave three up. If we're seeing a wave three up, we should be seeing this thing go to about 2360 or so. From there, we'll have a pullback and then from our pullback at 2274, we should go up to about $24 a share. That's going to be a wave one. Now let's talk about call options. So now we've had a minute degree 5-wave impulse to the upside, which is a higher degree one. And now we're relatively convinced that that's what we're seeing too, because now we have more confirmation. We have our downtrend that took us to our bottom, or what we think is bottom. And now we're actually in a 5-wave impulse to the upside, making us really truly have high conviction that that's what we're seeing. So we don't buy our call options yet. We wait for the retracement for this wave two. It's a higher degree from this impulse. It's going to go down to somewhere in this like 21, 22 range. From there, you find where your price target is for your C or whatever kind of correction it is. You find your price target. That's where you buy your call options, because then you're going to be in a wave 3 of 3 and you're going to be rallying. And the reason it's a wave 3 of 3 is because, look, we're looking for a purple wave 3 right now because we've already come down. We're looking for our wave 2 bottom. So if we've confirmed wave 2 bottom, and then we have a yellow wave 2, meaning that this right here is going to be a yellow wave 3 of a purple wave 3. It's going to be a monster move, and I believe my price target is somewhere at, I might have taken it off, yeah, but it was like somewhere at $38 a share for this purple wave 3. So with that being said, that's what I'm possibly seeing. If this is a bullish count that we're seeing on PLTR and the bottom's already in, which I said it could be, then ultimately I think we're going to see a 5-wave move up to this 24, and then we're going to buy this dip. When it dips here is when we're going to go long with options. Until then, all dips are a buy with shares, because what we could see if the market corrects further is we could get rejected at this 2250 range. And if we do, the bears are saying, hey, we're coming down and then our bottom's going to be down here and it's actually going to be a Z. If we do end up down here, that's going to be the ultimate dip buy. Mainly for shares, just because I still think you want to wait for your pop up for one and pull back for a two before you go long options. But just because I really do not think PLTR is going to break this downtrend line without a complete crash of the market. So I really like PLTR. Anybody who's been following me for a long time knows I'll look at their charts quite often. So I am long the shares and I will keep accumulating, especially at times like this where I think I find a really, really good buy spot. Okay. Enough rambling on PLTR. So let's look at Boeing. So anybody who got in this trade, I called this out over the weekend. I thought Boeing was a great buy, and then obviously the Monday flush was just godlike. It pretty much put us right at this at the uptrend line. and we're looking for a move somewhere to up in the 260 range. So I bought this dip yesterday, and obviously I had already paid it back big. I was already able to take my initial investment off the table. Clearly, I think I'm seeing it's either going to be an ABC, just like we're seeing across the indices, or we're going to see an impulse to the upside. Because of where we're at and Boeing being so beat up, I'm favoring an impulse up. I think we're going to get rejected somewhere around 220. So I still think we're going to see a little bit more upside from here. We'll get rejected somewhere around 220. That looks like or even 218, because it looks like there's some resistance here at 218, 219. So we'll probably get rejected from there, and then ultimately we're going to be pulling back. On that pullback, I think that dip is a buy, because I think that's going to be a wave two, and then we're going to rally extremely hard for wave three, and it's going to take us up to this 240 range. So all dips in Boeing are a buy, but now that we've had this big move, a big 5% move today, you almost have to wait for this pullback if you're not already in. So if you've already missed this move that we saw today, wait until we peak and come back down, and then try to get back in around maybe the 210 range or something like that. All right, so the last one we're going to look at is Square. I'm just looking at Square because I actually had to recount it based upon how low we went on Monday. So what I'm basically seeing is that this entire move up was actually 5 waves. I thought we were looking for a wave 5. What I'm actually seeing is that we've topped for wave 1. So what does that mean? Well, that means that we could still see more downside. Even though we had this rally today, so far I've seen an A, B, C move, so that could be bottom. If all the indices have bottomed, I do believe this is bottom. If the indices have not bottomed, then we probably have lower to go. Ultimately, what I see happening is that we're going to still pop up, probably get rejected at about 250 is my guess. And then we're either going to be staring at a 1 or an X. If it's a 1, we're going to pull back 60%, and then we're going to rally to all-time highs. If it's an X, then we're ultimately going to be going lower. And if we do go lower and Square gets back into this low 220 range, buy that dip. I think the lowest it could go, obviously, is like 207, 208, but I don't see it going that low. I think the dip will get bought up just like it did if it does get down to this low 20 range. So with that being said, I do like Square long term. And I do still think that dips are a buy, and hopefully on all these stocks I've just covered, we can get this bull count, and we'll find bottom somewhere over here, and we ultimately don't head lower. So, all right, guys, if you like these videos, go ahead and hit like and subscribe.